College students and their parents struggling to pay for an education. As you know, college tuition is already a heartbreaking burden, often leaving students reeling with debt for decades. But would you believe that some banks have actually been paying colleges kickbacks to steer students their way? Jerry Willis has been investigating this developing story and brings us the latest details.
Graduation is supposed to be an exciting time for students. For Rachel Solomon, graduating from New York University was time to face reality.
I'm currently $100,000 in debt and growing, with interest, of course.
Rachel is not only frustrated with her huge debt, but also with how she got it.
I was naive and young and excited to go to NYU, and I would, take their word for whatever it was. And if they suggested Citibank it was.
NYU, Rachel's alma mater, and Citibank, Rachel's lender, were at the heart of an announcement yesterday by New York Attorney General Andrew Cuomo about kickbacks in college loans, unethical lending practices benefiting both schools and lenders, and potentially hurting students like Rachel Solomon.
The college loan industry has developed practices over the years that we believe are deceptive, we believe they're unethical.
In the settlement, NYU and 5 other schools agreed to reimburse students for money they received through revenue sharing with Citibank. Here's how the scheme worked. The schools direct their students to preferred lenders to get loans, and then the bank gives the school money in return. NYU's preferred lender is Citibank. In return for using Citibank as its preferred lender, NYU officials say Citibank gave the university 0.25% of the value of certain private loans, for a total of $1.39 million over 5 years. NYU declined our request for an interview, but said in a statement that it used that money to give financial aid to its students. The university says Citibank was selected through a competitive process because it offers the best loan rates to the most students. Critics say the entire practice is unfair to the students who took out those loans.
It's really the school saying, you who already need to borrow money, we're going to tax you a little bit more so we can use these monies, whether it's to fund other students or infrastructure.
And critics say the practice of using preferred lenders leaves students thinking they are getting the best loan possible when they might be better off shopping around.
When a college says this is a preferred lender, the students believe it's preferred in their interest. That's why 90% of the students take a preferred lender, because they're trusting the school.
Citibank declined CNN's request for an interview, but said in a letter to Attorney General Cuomo, "We firmly believe that students who borrowed from Citibank at the few institutions with which we had referral fee arrangements have received the best terms, benefits, and servicing available in the market." Rachel Solomon has a 7.25% interest rate on her private Citibank loans, which one industry expert says is a good deal. But she thinks she might have done better had she shopped around.
I wish that the financial aid officers had told me other options, that told me to shop around, because there are some competitive rates out there.
Rates students don't explore because they trust that their school is protecting their best interests. Jerry Willis, CNN, New York.
We thought you might want to know what some of the other unethical lending practices are that